Good afternoon, everyone. My name is Amol Dete. I'm the editor of etcfo.com and also etbfsi.com, which are the dedicated news portals by the Economic Times. Today, the ETCFO team has here with me to bring to you this webinar, and they join me in thanking all of you for tuning in today. For those of you who are not new to ETCFO webinar series, this is our 10th episode of the webinar series, and this episode gets into the depth of the most crucial and invigorating issue of COVID-19, the Black Swan event that has led to the world's largest lockdown. It is definitely having a dramatic positive impact on pollution levels. In Mumbai, the sky is blue and it is sunny, where I'm operating from. But unfortunately, there is a gloom across world economies due to the looming uncertainty. With the COVID-19 pandemic upon us, India is in a lockdown mode, and it is indeed volatile, uncertain, complex, and ambiguous in the VUCA times. This afternoon at ETCFO's webinar, we are going to discuss how to respond to COVID-19, how to protect your business. The fear of global recession is slowly becoming a reality, and the governments are trying hard to mitigate the impact. Recently, the finance minister of Germany committed suicide after being deeply about the financial fallout from the COVID-19. Even though the UN trade report has said that India and China will be exceptions to the global recession, RBI too has assured that we are better placed as compared to the crisis in 2018. The fact of the matter is manufacturing plants are closed, the supply chain has broken, and managing costs is becoming a challenge. Workforce fears of layoffs and salary cuts. How to throttle and move forward is the question that we're going to discuss today. In this challenging environment, ETCFO, through this webinar, would like to discuss how to manage uncertain times and what does the future hold for us. As we have various finance leaders joining us from across the country, we hope that today's session is profitable to you and helps to prepare for the year ahead. And in doing so, we have a panel of three outstanding speakers who amongst them bring perspective, experience, and valuable insights. Please join me in welcoming Manas Dutta, the Group CFO of the pharmaceutical and biotechnology company with hospital chains Wockhardt, Madan Sabnavis, Chief Economist, Credit Rating Agency Care Ratings, and Sai Venkateshwaran, who leads the CFO advisory practice at KPMG India and is also the global lead Smart Digital Finance. We will have a short opening statement by each one of the speakers, followed by an interactive session. The participants are requested to send us questions on the private chat window to us. In the interest of using time productively, we will collate them and present them to the speakers. So let's begin. I have Mr. Madan Sabnavis with me, who's going to have his opening remarks now on the responding to COVID-19, how to protect your business. Over to you, Mr. Sabnavis.
Thank you. Now, when we are talking of this coronavirus and its impact on the Indian economy and the global economy, I think there are two things which we should keep in mind. The first thing is that let us be fairly clear about one thing. We really do not know how deep the impact of the virus is going to be. We are not sure about how many months would it take for this particular virus to play its way through. Because almost every day when you look at data, we see the number of people who are being afflicted by the virus increasing. And as of today, I think we can say that even though it's been almost 4 months since we have gone through this entire episode of the spread of the virus, we're not really getting a clear answer about whether any country is free from it. So if you look at India, we have been a relatively late starter. While the signs seem to be slightly different in the sense that we have been able to learn from what other countries have done, I think the situation may be slightly better. But it cannot really lead to complacency. We cannot really draw an assumption that things are going to be fairly normal, maybe in the next 15 days or 1 month's time. So it could be anyone's guess as to how long this entire process is going to go. The second part is that if we see the kind of action which has been taken by the Indian government, I think it's been very commendable because we've gone in for a shutdown for 21 days. Now, whether 21 days is appropriate or not, we really don't know because the first point was that we're not quite sure about how deeply ingrained is this virus, has the spread been contained, and at what particular point of time do we get this feeling that the worst is behind us. But all we can say is that the 21 days has probably put in certain rules on the ground to make sure that the virus doesn't spread. And to the extent it's already spread, we'll get to know when numbers come out. Now, the shutdown, of course, means that a lot of economic activity has come to a standstill. And we saw that even before the shutdown was announced, the entire service industry had gotten into a spin. We looked at aviation, if you look at tourism, you look at hotels, you look at media and entertainment, all of them had made certain announcements about shutting down shop fully or partly, working at a much lower capacity utilization. Normally these services work at around 60-65% capacity utilization. It had actually already been rolled down to around 40%, 30%, and finally came down to zero. In terms of manufacturing, I think a hard decision was taken only after the shutdown was imposed. And therefore, there's reason for us to believe that a manufacturing sector would be negatively impacted, though to a lesser degree than what we have seen for services. And one thing about services is that when services get impacted, there is no scope for recouping it. So if I don't go for a holiday right now, it's unlikely I'm going to go for double holidays or triple holidays once conditions normalize. Whereas for manufacturing, there's always kind of a soothing feeling saying that if I don't buy an automobile now, I don't buy a consumer durable good now, I would probably buy one later on. One can't be sure about it because it's difficult to predict human behavior. And what we have seen is that this shutdown has meant a loss of jobs. We have seen salaries of people being cut. The corporate sector has started cutting salaries. Government has announced cut of salaries in certain states, which really means that even our purchasing power is going to be affected. Now, normally the question posed to economists is how much is this going to result in GDP growth? Are we really going to have negative growth? There are certain agencies which have already brought out estimates saying it's going to be negative growth. Some are talking in terms of a recession, which technically is 2 quarters of negative growth. But I think I would prefer to go by the way in which the Reserve Bank of India has put it, saying that they haven't abstained from giving a forecast because they really don't know as to how deep, how long is this particular virus impact going to last. But one can put a kind of a fair enough conjecture that for 2021, we cannot expect growth of more than 4%. And 4%, we're assuming that a lot of growth is going to come from the government sector, it's going to come from agriculture. But these two are the segments which are relatively isolated from the impact of the virus, because the government has already announced 1.7 lakh crores in terms of a fiscal stimulus, which will probably be front-loaded in the first quarter, as seen by the calendar which has been announced, the government borrowing program. Agriculture will carry on irrespective of what really happens to the rest of the economy. The output is going to be there. Of course, there are challenges, what you had mentioned, Amol, had mentioned about the supply chains, the distribution channels, they've all actually gotten choked off. But what we're looking at is a quarter with heavy spending of government, agriculture being fairly normal. We may not go beyond 1.5 to 2% growth. Of course, if things are worse and it lasts for beyond 14 days, we cannot really rule out a negative growth rate also. So we're talking of rather low growth conditions, low investment activity, and most of the impetus, if at all, is going to come from the government. And if you've seen what the government has done so far, what announcements have been made, if I couple it with what the Reserve Bank of India has announced, it's more a case of making the economy survive rather than bringing about growth. So when people are losing jobs, they're trying to pass over a certain amount of income. It may not be adequate, because in fact, one would say that giving some 100 rupees is not going to help. Giving 5 kilos of rice or wheat is one part of it, but I need to have the ability to cook the food. So these are other kind of questions which actually come about. But so we're talking of a large economy, large section being affected, and all measures which have been announced will probably alleviate the pain, but definitely cannot cure it, and definitely will not result in kind of an acceleration. So I think with this, this would be my opening remarks on this particular subject.
Very well said, Mr. Sabnavis. In fact, it was a broad view and an important perspective. 2-3 points were really good. In fact, media, we all are suffering. We are from media, and our parent companies unable to distribute the newspapers because of whatever the confusion is there. And obviously, one of the very important points you said is survival. The 4% is a very optimistic numbers that you said. Obviously, we'll come back to you specifically with a few questions. But now I will move on to Mr. Datta. Please, I would like to have your opening remarks.
Thank you, Mal, and thank you, Madan. Good afternoon, ladies and gentlemen. This particular subject which we are talking today is something probably we will be the first human race in the world to talk about it. None of us in our lifetime has seen this, and probably even our fathers and grandfathers and mothers have any time seen this in their lifetime. So to me, from the industry side, and particularly when I represent our pharmaceutical and healthcare industry, a life science industry, which is coincidentally now been considered to be as an essential service provider, my understanding as on today is that we are just trying to assess the beginning of the beginning. Uh, I have been speaking to my internal customers, my colleagues in the company, also some of my colleagues within the industry. I think what we are today in terms of COVID-19 is only an assessing mode. We are neither in a mode of getting into a resilience, a pathway, and neither we are in a mode that what should we do next. We are just assessing on a daily basis. That's my understanding. And since it is something which are very, very unique, uh, and everybody is talking about a manufacturing disruption, everybody is talking about today a disruption of supply chain, disruption of way of work. Uh, More than that, to my mind, is that still the very early warnings we are right now taking. Probably going forward, I'm not pessimist, but going forward, probably 2 to 3 weeks down the line, we will understand it better that are we taking a right action as of now? Today, like, when we do a work from home, it's a compulsion. It's a compulsion. There are no other way. The government all over the world has given a right kind of a guidance that stay safe, stay home. There's no doubt about it. Even from a pharmaceutical industry, we do not have much answer beyond that. But importantly, the way we are seeing the world, both from the manufacturing to distribution to operation, financing, compliances, reporting, uh, everything is every day evolving and changing. One good part is that, unlike 2008-9, which the world I have seen, there were a lot of, I think, pessimism, a lot of sadistic environment that I have seen. Today, probably, it's not a pessimism. There is a fear of life. But people have taken one thing for sure, both at the management level, at the consumer level, at the manufacturers level, at the distributors level, is that we have to work together. I think that's very, very important. And that collective action, both from the government as well as the private and public sectors, I think that's quite encouraging. Everybody is coming into, because one thing which is very big equalizer in life is the threat to death. And that does not take care of anything, whether he is powerful or not, whether somebody is rich and poor. So my understanding today is that while we are assessing the risk per se in all the sphere of business, one thing is that we are taking a little far, I think a little knee-jerk reaction in terms of some of the actions like pay cut, some of the actions of job losses and so on and so forth, because it is too early to really comment. We don't know what it is. Some of the industry which are at the lower end of the curve because they got the hit because of they are in that industry which is biggest impacted. But there are other industry which is also not that impacted. I'm not comparing anybody here, but their traditional business models are still working. Now, before I leave it to my next speaker on this, three things I will put it before we deliberate it at a later stage. One, are we assessing and reassessing the beginning of the beginning? Point number one. Point number two, are we still at the phase which is very traditional, or we are challenging our traditional way of working or way of managing to a different things? And probably going back to the very fundamentals, like some time back, people talked about cash is king, but cash is the less valuable on the balance sheet. But today, entire industry is going back to that cash is king and also the most valuable asset. Now, in this current context, probably the working capital finance as a CFO, I will speak about little later, whether the cash flow management is important or getting into as we progress, assessing and reassessing risk and making sure that we take a right step will be very important from the industry. I will pause here, and before my next speaker, Sai or anybody else will talk about it. Thank you very much.
Thank you, Mr. Datta. In fact, very important thoughts. Cash flow management is a very, very important point that you touched. Obviously, I will try to take more out of it once we actually start the conversation. I will move on to Mr. Venkateshwaran now. Mr. Venkateshwaran, you being the leader of CFO advisory and advising many companies, your opening remarks I would like to have.
Yeah, thank you, Amol, and a very good afternoon to all of you, ladies and gentlemen, who have joined us on this webinar today. So like the other speakers said, I think the one unique thing about the current pandemic that we're going through is all of us are equally impacted and all of us are in this together. And this is across the world. So unlike some of the other crises that we saw, which impacted maybe some sectors more than the others and maybe some geographies more than the others, this one has practically impacted every one of us in some way or the other. And it, in a sense, is certainly resetting the timelines to something which is pre-COVID and post-COVID. And I think that's how we will look at life in a lot of ways. Now, when we look at this, of course, I think all of the disruption, etc., that's happening, I think, has already been spoken. But the one good thing that's happening is, I think, there is a lot more of kind of knowledge sharing and thinking that's happening on a collective basis across borders on how to deal with this. And I, for example, I'm regularly on calls with some of my global counterparts as well as with other colleagues in other parts of the world, trying to learn from each other in terms of what's working, what we need to do differently, and so on. And similarly, regulators are talking across the world, companies are talking. We've been kind of hosting similar kind of webinars for people on industry sectors, etc., where essentially people who are otherwise kind of tough competitors in the marketplace are actually coming together and sharing what's working, good practices, best practices, and so on. So it's a pandemic that's really brought everyone together, and I think that's the good part. Now, when we look at how companies and CFOs and everyone else is dealing with it, I think there's a set of immediate priorities that everyone's looking at. So right from the safety of the people to then making sure that at least we're able to kind of get through the next few weeks with as less disruption as possible. And of course, no disruption is certainly not an option. So to minimize the level of disruption, and so looking at some of the immediate priorities and across different segments, of course, Mr. Datta spoke about cash flow and kind of liquidity management. Similarly, several other things, including looking at your regulatory and compliance issues, or be it financial reporting, be it in terms of keeping your operations going, looking at your people engagement, and the whole people angle, looking at the more kind of medium term, keeping the kind of getting your finances in order, getting your cash flows more aligned to meet the more longer term needs, or looking at stakeholder engagement. I think all of these are kind of priorities that CFOs and others are looking through to identify what are actions that are more immediately required, then setting out a next set of actions which are more near term to short term, which is to kind of get used to this new business as usual as it is kind of starting to evolve. And then, of course, look at the more short to medium term kind of priorities. And essentially, a lot of actions that fall under these three buckets. But the one thing which COVID-19 has done is certainly, I think, established or is starting to establish what is a new normal. And in a sense, in a lot of ways, has shown us the art of possible in terms of what you could achieve with new ways of working, be it working from home, be it in terms of what you can actually do in a lockdown, and how we can all kind of continue to operate. So, for instance, the relevance of physical offices will certainly get challenged once we go back to a post-COVID-19 scenario, or the need for us to travel across. And I'm someone who travels maybe 2 or 3 days a week. The need for me to really travel is something that will certainly be questioned, etc. So in that sense, I think there are new ways of working that will start to emerge, and I think there will be a new normal that will get established as we go along. I think also when we look at the adoption of technologies in a much greater way, I think today video conferencing tools, be it what we are using for this one or some of the others, have become almost like a norm. I think from morning till evening we are hooked on to some of this. So in that sense, I think a digital transformation and use of a lot of the new technologies, emerging technologies, will be certainly accelerated to a great extent with this, because in a pre-COVID scenario, a lot of organizations would have resisted the change because there was no need to immediately change. They said, okay, we can look at this 2 years, 3 years down the line. But now that you've been forced to change, I think you will see a lot of adoption of digital technologies, etc., which also kind of changes a lot of the dynamics of what the post-COVID-19 world looks like. So on the whole, I think we are getting ready for a new normal, and I think it both brings opportunities as well as challenges, and I'm sure we will get through all of them together.
Very meaningful, Sai. It was really nice listening all of you, and I must thank my team, for having all of you in a 3 different backgrounds and 3 different, offering perspectives here. So I have already prepared my questions, me and my team, and I also started getting questions from the participants. We have right now more than 150 attendees listening to us. So I will start with some questions now, and including mine and the questions that we prepared, and also the questions that the participants are asking. So I will start with you, Mr. Sarnavis. Obviously, we know that it's an uncertain time. We know that the UN said that China and India will be different, but still, I would like to take this liberty and ask a question to you. The COVID-19 situation is a status quo and gradually becoming worse to worsen. If closed down continue even after April 14, 2020, I mean, that is the deadline that the Prime Minister has given. What could be the tentative time frame you are looking, for the economy to come back, or back to back? As you likely mentioned that nobody's going to start a business on 15th of April, but still, if you could give us some sense on the futuristic time frame.
Actually, if you're looking at, say, the shutdown coming to an end on April 14th, I think when you're looking in terms of services, I think they would be very keen to get into operation immediately. But the whole question is that, will there be enough users for these services? Now, I read in the newspaper saying that the railways and some of the airlines have already started taking bookings post 14th, because they have the feeling that this government is not going to have a national kind of a lockout. There could be certain state level lockouts which would continue, but not at national level. But even then, I think when you have this lockdown or lockout taken back, will individuals, will be business travelers actually start flying immediately to do our business? Or as what Sai had spoken of, all of us have gotten used to using technology. We get into on board, which is a much safer and secure way of conducting business. So my sense is that even in case of services, I don't think there will be a hiatus of at least 3 months before people get the confidence to go back to the malls, go back to the theaters, go for holidays, so on and so forth. In fact, even if you look at in terms of, I'm just talking of services, in fact, to begin with, even if you talk of all the conferences which we are holding, I'm quite sure that nobody will do it until the first quarter comes to an end and you're actually assured that things are normal. But in terms of manufacturing, my sense is that it will take a much longer period of time, because right now, if the focus has been more on FMCG and drugs and pharma, I think these are the only 2 sectors which would be seeing some kind of a level of activity. And other ones which are the ones which normally stimulate growth, consumer goods, construction. I think those things are going to, which are also dependent upon the labor which has been displaced. I think they're going to take some more time to really revive. Now the UN's report is fairly quizzical, I would say, because they've spoken of China and India. They're not given any reasons as to why they think China and India will do better. Because if you look at the kind of stimulus or the stimuli which have been provided in a number of governments, it's over 10% of GDP. Whereas if you look at India, we're talking of 1.7% fiscal stimulus, 3.4% in terms of monetary stimulus. It's still much lower than what other governments are giving. Understandably, the fatalities, the impact, the spread is definitely more in those countries compared to India, but we're not sure about how the Indian chart is going to play out in the next month or so. But this kind of optimism for India, I think, I'm not quite sure. I don't really share that, because even when I said a number of 4% for the year, I said not more than 4%, assuming everything becomes all right by April 14th. And my sense is that this is going to last for a longer period of time, which means that the damage to the economy is going to be higher. Because if we look at the way in which our GDP, our nominal GDP is, I would say that on a daily basis, we would be generating something like 70 to 80,000 crores. So I have a shutdown for 1 day, actually lose potentially 70 to 80,000 crores. Or at least 80% of that, I would say, because we say, okay, agriculture works, banking works, government works. Still, I'm losing something like 50 to 60,000 crores a day for a shutdown. And it's very difficult to recoup this kind of growth. And assuming that even after April 14th, there'll be a month or 2 months where we're working at maybe 20-30% capacity utilization, I think the damage is going to be very, very severe. And what's more important is that employment has gotten affected, and I think employment, spending, income, these have been the issues which have nagged us for the last 3 years post demonetization. And this is not getting reversed, it's getting exacerbated. So I think that the pain is going to be for much longer than what one is hoping it will be. And the numbers are definitely not going to be too good. Maybe compared to Western countries, where I think people feel it's going to be negative growth because they're growing at around 2.5% maximum. If you look at the US economy, they could probably be sliding into a recession of a real negative growth. We may not reach a negative growth, but I think even 2 or 3% growth compared to a kind of target of 6 to 7% which we had means it's going to be underperformance. It's going to be a severe shock for us. Sure.
Yeah, I think I had muted myself. Yeah, thank you so much, Mr. Sabnavis, for a detailed answer. I will move on to Mr. Datta now. And Mr. Datta, I want you to give me a very, specific answer on this particular topic that we have chosen today, and that is what is more SMEs and MSMEs wants to know. Because when you're speaking about or talking about the impact, that the first sector that comes to our mind is the manufacturing, and you are partly manufacturing, partly into healthcare, and quite related with COVID-19. So your learnings are a lot more than many other companies. So could you please explain us, how SMEs, MSMEs, or small companies, businesses should protect their business in this environment? And you could, I want you to give this answer because I want you to also share your learnings from the manufacturing, as a manufacturing company.
Thank you, Amal. Before I answer to your first question, I would like to go to the second question first, that what we are trying to do, being into a healthcare and life science company. All right. So as Madan has very rightly said, that probably this particular COVID-19 impact will be multi-quarters, right? I really do not foresee that the 14th of April onwards, there will be a complete back to normal scenario. I really do not think so. So in case we are expecting a recession, a slowdown in demand, so naturally for all of us, which is very important to make sure that we go back to fundamentals. And when I say go back to fundamentals, is that it has to be very coordinated manufacturing, supply chain, distribution, and the collection, the cash flow, the working capital cycle to bring in. Probably right now, it's not the time to talk about extension of credit period beyond what normally we do. Like many industries have talked about that probably the collection cycle will go up. But I will have a very sincere request to all industry representatives that let us not talk about, because in case somebody is collecting at 60 days and now he is collecting money at 90 days, naturally somebody will also be paid at 90 days. It cannot be paid anymore at 60 days. Though the bankers have already come back and talked about, the RBI guidelines has also come in for a moratorium period. They have also talked about a 10% of the working capital limits to be pumped back. So those are probably for a select few. And not each one of us will be able to get through that particular financing mode. And one thing also is very important, that in a recession mode, financing does not help beyond a time. The recession is best addressed when the cycle of working capital, cycle from manufacturing to the distribution to the cash back, comes back into the kitty. It is not a short-term cash flow mismatches financing by a working capital mode. I think it does not work for a long term. So what we are trying to do is that we are trying to get into the productivity at the plant as early as possible. There is no clarity that when the full phase of productivity will come in. We need to answer that. And for that, we need to protect our employees, right? There is no doubt that as of now, the most important part is protecting employees. So protecting employees, getting into the productivity of the plant, bringing back whatsoever possible. I'm very happy that the government has already started allowing the essential and non-essential distribution of goods. That's a very, very encouraging, right? Earlier it was restricted only for the essential goods. So it is very, very encouraging. I'm very happy to share that some of the exports have started happening. Some of the import bills or imports are also started happening now. So probably in the future, there will be a little bit of ease. But what is very important that till then, which we have done, and particularly I have done, that's the point I wanted to emphasize before I go back to your question, is that right now is the time for compassion. And what I have personally done is that I'm working from home. All my team members, I am meeting them not for office, over a call once a week for all my team members at the different functions all over the globe, making them as a part of us. We are no more going into a 10 hours, 8 hours working on day-to-day basis. So we are in touch. And when I'm meeting them, I'm not speaking to them only for office. It is for what they are doing, what their parents are doing, the kids are doing, what their families are doing, whether they need any kind of a support. I think we need to do it quickly and as far as possible. Little bit of empowerment rather than questioning people whether they are working from home or not. I think we should have a more objectivity rather than monitoring, right? This is what will be important right now. And with the compassion, what I feel is that comes is the trust, which is very basic human value. Probably these are the 4 or 5 points which we need to do to overcome the situation. Balance. We have 130 crores people, consumption will come back today or tomorrow, right? We have 60% of the people who are younger generation, they will go back to the field. So it will work today or tomorrow. So it's not, the question is that we should be very pessimistic right now. Going back to the SMEs or the smaller businesses, my sincere suggestion is that this is not the time to go back onto the drawing board to add capacity. This is not the time to go back and fetch for newer investments. Rather than that, go back to the customers who are the long-term suppliers or long-term customers of us, and work together in this. And there can be some kind of an understanding that we protect each other. That will be there. No compliance can help us on this forum, whether it is an RBI, SEBI, or any regulators talking about anything will not help us. We have to be a little more compassionate and to overcome this situation. This is not a financial crisis. This is not a financial crisis for sure globally. This is a much bigger issue which human race has never seen. So we have to deal it differently than a financial crisis. Thank you.
Very dynamic thoughts, Mr. Datta. In fact, the compassion point was really appreciable, and you said it really nice that you should speak with your vendors, supply chain people, and everybody, and try to understand what they're doing, how they're doing, rather than just giving them an objective and trying to understand. Very, very important thought. I'm sure most of the participants, specifically from the SMB entrepreneur side, would buy that thought. I would like to come to Mr. Venkateshwaran, and my simple question to you, considering what Mr. Sabnavis and Mr. Datta said, and that is, what is the current demand from the SMEs and small businesses is. Simple question that is coming to their mind now is how to manage this crisis, because Mr. Datta said this is not a financial crisis. Mr. Sabnavis pointed out this is a question of a survival, and though we are in a different situation, still the question is how to manage this crisis. You have been talking to CFOs, you have given your advisory services, offering your advices to many SMEs and many companies. What is your answer here?
Yeah, so like I said, I think when we look at how to manage this crisis or kind of move forward from here, at least most CFOs are kind of trying to deal with the day zero imperative or the immediate kind of needs. And one of the first ones, and again, now re-emphasizing what Manoj just spoke about in terms of the people angle and the compassion angle, etc. I think is the people imperative is probably one of the most important. So just to make sure, apart from, I think, just ensuring the safety and well-being of the people, but to essentially help them both kind of emotionally and physically kind of break through this crisis and come out kind of stronger. So I think that's certainly one of the biggest things that we are also kind of focusing on and staying engaged, and of course advising our clients and helping them do that. Second is, as you kind of move towards, let's say, even for people starting to focus on this whole work from home, etc., because no one's really kind of tested this out in terms of how do you actually work from home, how do you get your priorities right, etc. So helping them focus, helping them prioritize, and so on. And of course, not everyone will be able to kind of suitably engage themselves and do what's required. So essentially trying to see how you keep them engaged, not from just a people connect perspective, but also kind of suitably engaged to kind of emerge more suited, well suited in the new normal. So which is where focusing on the reskilling, upskilling. So for instance, we kind of almost every other day we are running kind of e-learning series, etc., for our people, just to make sure that I think they're engaged, they're picking up some new skills that may be relevant as they come out into a world which is probably a lot more digitally transformed, leverages technology in a much bigger way with remote working and so on and so forth. So I think making your people feel, I think, cared for and engaged is one critical angle, because ultimately for a lot of organizations, people are your kind of biggest assets. The second is, of course, looking at the other aspects of business. So for instance, looking at cash forecasting and essentially looking at your priorities, reassessing your whole working capital requirements, looking at your ability to kind of cash pool, how do you kind of work with your customers for collections and so on. Looking at your whole cost structure, variable, semi-variable costs, extra within your structure, starting to deal with all of that. So in a sense, appreciate and recognize the fact that these are tough times. I think it requires each and every one of us to kind of tighten our belts and kind of be more frugal in the way we kind of actually carry out our business. So essentially looking at that whole cost structure extra in a much more rigorous manner, and then looking at what are the additional sources that you can essentially look at for liquidity. And again, here leveraging some of the benefits that have come through from the regulatory announcements and so on, plus trying to assess new sources of avenue for capital, etc., which I think is a topic that we can discuss at length as well. Then third is looking at, again, considering that we've just dealt with a year-end, day for yesterday was the year-end. People all have kind of financial reporting kind of commitments. Almost all Indian companies have March 31 as a year-end. So looking at the whole impact on financial reporting, and of course with all this disruption that's happened, I think impact on top line profitability, valuations, idle capacity, kind of leading to questions around impairment triggers and so on, or looking at the declining ratios, or looking at the volatility in the markets leading to kind of impact on forex rates, interest rates, and what's that's doing to your various assets and their valuations and so on. So I think all of these are important questions that need to be considered from a financial reporting perspective. Then looking at preparing for next year and looking at your whole financial planning and analysis, looking at your budget, how do you kind of, what are the scenarios under which you actually start budgeting and starting to kind of forecast into next year, because whether it is of course, whether it is a moderate growth to a negative growth and what extent of negative growth, etc., I think that will possibly vary by sector. But essentially, stress testing various scenarios, and I think having a dynamic plan to kind of keep revisiting your assumptions and your budgets and forecast. Again, looking at your customer segmentation, again, price elasticity, payment history perspective, and so on. And also kind of starting to put together some real-time analytics to help heads of functions take advantage of being more agile in their decision making and so on. And last but not the least, I think also looking at the whole stakeholder engagement, because it's not just your internal people or the management that needs to be taken care of. I think there are lenders, there are investors, there are regulators, etc., who need to be kind of dealt with, of course, while everyone is dealing with this situation. But all of them need to clearly understand how you're dealing with some of these situations, and so that I think they also take a more empathetic view to setting expectations from you. So I think shareholder engagement and resetting shareholder expectations is also an important avenue that needs to be kind of dealt with. So I think these are some of the more immediate issues that CFOs are kind of dealing with, and what we are also kind of helping organizations kind of tackle in the short term.
Quite interesting, Mr. Venkateshwaran. I will come back to you, Mr. Sabnavis. The participants are actually bombarding with questions, and though you partly mentioned and gave your perspective specifically on the economy, the major question that people have right now is, considering where we are today and whatever the measures that RBI has taken, how do you see the inflation in the next 6 months? Do you think the inflation will rise? If yes, what could be the numbers?
If we look at inflation, I think there will be a tendency for inflation to increase. And I think that has been caused or triggered mainly because of the supply chain bottlenecks which are there. So in fact, if we go to the normal kirana shops right now, anywhere around us, we have seen that the prices of all commodities have gone up. Now, this holds both for horticulture products, because we look at vegetables and fruits, which have been the major contributors to food inflation and also headline inflation. Now, we felt that by the time we came into the months of March and April, on account of the Rabi crop, the third onion crop coming into the market, there would be a case of prices coming downwards. What we have seen is that even though the supplies have been good, but because of the distribution problems which are there, right from the farm gate to the mandi and from the mandi into the interiors of various towns and cities, prices have tended to go up. The same thing holds also for other food commodities. We're looking at things like basically like pulses, we're looking at wheat, rice, atta, all these products which are there. Prices have tended to go up. I think unless we're able to plug these supply chain bottlenecks which are there, because today I think the problem is one of communication, because certain things have been said at the top, but the information does not really percolate downwards. And India is a federal structure, states have their own rules, the municipals have their own rules, districts have their own rules. So movement of goods have been hampered, and this has artificially pushed up inflation. So as far as food products are concerned, I think food inflation is something which will continue to reign high. And today we felt that with the CPI inflation around 6%, it could be tapering towards 5% or so in the month of March and April. But my sense is that the headline inflation will continue to move in the upward direction rather than in the downward direction. And we could be looking at a number in the region of 7%. And even the 7% is more because of a lot of soothing effect coming from the non-food items. So the food category is something which is going to continue to exert pressure on overall inflation. In terms of core inflation, with crude oil prices, of course, that's outside core, but crude oil prices coming down, petrol, diesel coming cheaper, that combined with the core products where there's not much demand, I think that the core inflation part will remain, core as well as fuel inflation will remain muted. I think food inflation is something which we would see increasing maybe up to around 7% in the month of April. But I think after that, it should be mean reverting, assuming that conditions normalize. Just one point I wanted to talk about when you're talking about SMEs, because as a rating agency, when we keep talking to SMEs, I think lots of them are complaining about receiving payments. I think that's a major part on account of this particular shutdown. Because the moment we have seen certain companies close operations, they're not able to make payments to their vendors, and most of them appear to be the SMEs. So I think they have taken a major hit. It happened during demonetization, it happened post GST, now it's happening again out here. So I think it's going to be a triple whammy for them as far as payments are concerned. And this actually leads also to bankruptcy. I think at a larger level, the moment you're not able to get your payments, you're indebted, maybe your moratorium holds for 3 months, you get new working capital limits. But at the end of the day, I think the banking sector is also going to be in a very, very tenuous situation, because you will have to balance all this up. The once conditions normalize, you suddenly realize that there are lots of people who borrow money who are not able to repay. That will be a bigger problem going ahead.
Right. Mr. Datta, you gave a very detailed answer about how companies should take care of their time specifically in this situation, and they should speak to their partners and all. But considering the situation that we do not know how long this uncertainty will be, considering the lockdown may continue, and considering a lot of challenges the small businesses and specifically the MSMEs and everybody will face, is there any specific advice as a CFO that you want to give to the CFOs, those who are actually battling between the cash flows and thinking how to give the salaries to the people because their payment has been stopped and they are not getting the money? At one side, the government is trying their best to, help them through moratorium and everything, but actually do not know how the situation will pan out. So what is your advice here specifically for the CFOs who's going through this difficult phase?
Well, it's a very valid question and very difficult question. Answer cannot be very generic to each and everyone, because for pharma industry it could be different, for FMCG it could be different, for automobiles and metals and mines it could be different. But one thing which comes into my mind as a CFO is that the majority of our blockage of money happens because we are always and utterly optimistic that our product will get sold. And that's the reason the entire cycle of raw materials holding in the books, means in the factory operating areas, the inventories, the work in progress, the finished goods, both at the own warehouse level as well as the dealers level, are generally kept beyond a particular point. And generally, that pressure always comes to each one of us because our marketing expectations are always eternally positive that it will be sold tomorrow. Now, today is the time that probably we cannot keep our entire inventory of finished goods, semi-finished goods, and raw material, packing materials for an enormous amount of period. We have to really go back and start doing more. I'm not talking of GIT, just in time, but whatever best one can do. This is one I will sincerely suggest everybody to get into a working capital cycle. Point number two, when it comes to the inventory, the collection level, generally it's a tendency that if I don't pay on time, I save money. But that's the breakage of the entire working capital cycle. Probably even if we do a payment on time, whatever that is agreed upon, whether it is a 90 days, 120 days, 180 days, irrespective of which industry we are, but we should adhere to bare minimum support of that. There, a collaborative approach of every partner in the game is needed. So there it is a collaborative approach. And third is that working capital, generally people talk about only the inventory and debtors. People do not talk about the other inventories, like your stores and spares that you keep in the factory. We keep it for for many reasons. I think now this is the time where you can think of the bare minimum necessity of stores and spares that you can keep. Probably if you are stationed, your manufacturing facility is stationed in one particular location, you can collaborate with other manufacturers in the same, that, okay, I will keep this kind of an inventory for the stores and spares. You can keep, it will be like more and kind of an collaborative or on rationing inventory. This world has seen it in the past. I have personally done it. So these are the areas probably for the next couple of months one need to do. But whatever it is, cash flow management, it will be very critical. My understanding, the government, like internationally, the US and UK government, now the Irish government, I'm present in 21 countries, that's what I'm saying, have started giving a temporary funding for payrolls, temporary funding for your lease repayments, and so on and so forth. Probably India will also come up tomorrow for something like that. Hopefully the RBI will look into that. So in case that happens, then some kind of a stopgap arrangement will work. But what I said is something we have to go back to the drawing room. The normal standard practice of working capital management and cash flow management will not work.
Very again pertinent thoughts. And Mr. Venkateshwar and I have a very sector-oriented question. People are asking from there are participants who wants to know some sector-oriented questions. One is from service and second is from real estate tourism. So the question is, what can be done by the professionals in service sector to safeguard their current businesses and also generate new businesses? And at the same time, there is also a question: how does real estate, tourism, and apparel industry try to overcome, in this tough times, as the consumer behavior has been changed and it will change for some time going ahead?
Yeah, so I think that's a very interesting and, but at the same time, a difficult question to kind of address. So again, maybe I can try and give a more generic response, because I think specific actions may vary by individual situation and individual kind of sectors. But essentially, like I said, this is kind of resetting a lot of things, and we are starting with a new normal. So in a sense, it's almost about looking at this as the next level of disruption, and to see how do we kind of develop new services, new business models, etc., that are relevant in the current context, and essentially start building around it. And very interesting insight yesterday. Again, one of the insights that we got from one of our global calls was about what's starting to happen in China. So China, as you're aware, I think has started to come back into business, and factories have started working, etc. But one interesting change that's there is the sudden shift away from using shared mobility infrastructure to people commuting in their own cars. And maybe about a year back, a year and a half back, we were talking about the emergence of some of those business models, and in a sense, how that was essentially going to revolutionize the whole shared mobility as a concept, and kind of getting people to move away from ownership of their own vehicles and so on. And but today, what you're seeing is potentially a partial reversal, maybe not for a very long time, but essentially a part reversal of that. So in a sense, you got to start looking at what will be the changed behavior of people and the changed needs of people as they start operating in this new normal. And I think look at new business models that can be developed, and essentially how you kind of deal with this disruption. Now, sectors like travel, tourism, etc., I'm sure will take a while to get back up and running. And in a sense, again, I think if you're expecting people to start going away on holidays, even if it's 1 quarter down the line or 2 quarters down the line, even if let's say the spread of the virus is very well controlled, I think all of us are going to think twice before we actually decide to head out on vacations, etc. So I think some of those sectors will see a longer period of time for it to kind of come back to normal. But I think every sector, I think, will need to look at what are the green shoots that they can essentially get from the current situation and the current disruption, and potentially even redeploying or kind of their assets, or kind of pivoting their business models onto something else, potentially a related sector, instead of focusing on that one sector itself. So I think those are the ways companies will need to deal with it.
Okay, interesting. Yes, I mean, there are many concerns specifically from the tour and tourism industry, but someone said it really nice in a different manner. So that, okay, but I think that will help a lot of Indians who are going abroad to at least roam in India itself. So perhaps they will save some money and go in India and, try to spend some time in India. And perhaps it will help Indian economy. Mr. Sabnavis, one question I want to ask you is specifically about the trade dynamics. I mean, we have seen this war between, the China and America, but now considering the current situation, what is your advice, or how do you see trade dynamics panning out in India and globally?
If you look at trade, let's look at it globally. I think things like trade wars are going to be a thing of the past, because I think today there's going to be countries which will be just trying to survive. And I think the countries which are more inward oriented, and I think that's where I think India probably scores over some of the other countries, would be better off, because I think all countries which are export oriented will always be dependent upon how growth takes place in other countries. And today, when we're saying that the Western developed world is going to go into a recession, we're talking of negative growth. There'll also be less demand for various imported products, which means it affects the exports of the developing economies. So I think that way, I think since India has never really been export oriented, exports have been more a kind of support for the import bill. I think India will be less affected by that. But in terms of revival of trade, I think again it all depends upon when the global trade, the global economy recovers. And as we have seen that different countries, the Western countries, have been impacted in a differential manner. And the pace of their turnaround, or the timing of the turnaround, is going to be very, very different. So I think at least for the first 3 or 4 months from now onwards, that is, I'm talking of up to maybe July or so, we cannot really be expecting any kind of a growth to take place in global trade. And it'll be more a case of intra-regional trade. I'm talking of emerging markets, trade among the emerging markets, because emerging markets seem to be relatively better insulated against the virus compared to the developed economies. In fact, if you look at the top 25 economies and say that how many of them are who have been affected by the virus, I think 20 out of 25 are actually developed countries. So I think trade is going to be more regionalized, and I think regional trade agreements is something which will be probably more pertinent. But on the whole, I really don't think there's going to be any kind of a major boost for trade, and I don't think any country can really depend upon exports for their growth. So I think this is going to affect all the East Asian economies. So it's going to be more of a case of the ASEAN countries trying to bolster trade among themselves, but to try and capture greater markets, I think that's not really going to happen this year. So 2020 is not going to be a good year for global trade, and countries dependent on exports for survival or exports for growth are definitely going to be handicapped.
Okay, Mr. Datta, sometime back, you said that there are many countries who came with different packages to help the companies, but considering India and its demography, 130 crore people, a huge population, and whatever the government has announced, the budget of finance minister, and obviously RBI's budget is much higher than the, in fact, finance ministers. Do you think it's enough? Point number one. And point number two is, what else can government do specifically, to protect the businesses? Because obviously if the businesses survive, then automatically the economy will survive because jobs will be protected. So what else that government can do? Perhaps, do you think relaxation in taxation, relaxation in delaying some payments, the way they did it for IBC and everything, will work out? So any thoughts on that side?
No, I'm very happy to note that what RBI has done last week, particularly for all the repayment obligation, both at the individual level as well as the corporate level, amortization has been postponed, right? So that's a very good measure. This was much desired. I would like to put that one thought to the entire administration. We have spoken to the CIIs and so on and so forth, but this is also a forum where each one of us can go and talk to the administration is one thing. In case recession is coming, in case my manufacturing is going to go down, and my quarter by quarter the profitability of the organization comes down, that's the expectation by each one of us here. So naturally, the GST collection will be low. Naturally, the tax collection will be low, both at direct and indirect level. So in case that's the reality, why not to give right now and waiver? Why to give a person to pay a 2 months moratorium for GST right now? It can be said today that not to pay a GST for the next 6 months, not to pay your taxes, both personal taxes as well as the corporate taxes for next maybe 2 advanced tax quarter. This will help. What does it really mean is that as of now, very nicely done is that till June, there is a solace happening. But beyond June, we do not know what is going to happen. Everybody is worried that there will be a fiscal deficit coming in. And so naturally, government may not be interested in cutting down the tax rates or giving a tax exemption. But my feel that even otherwise, the tax collection will be lower for at least the first 9 months of this fiscal. So better to give right now a guidance. We in India, generally what we always do is to be a little reactive. Whereas if you see the UK or US and so on and so forth, they have, like in US, they have given a guidance that your current year losses can be actually carried back to 5 years. Now, these are the guidances which they have already come. So people know that what I can do and what I cannot, rather than 6 months down the line, you talk about it. People can plan accordingly. So my sincere submission to the authorities will be probably exempt each one of us from taxes, irrespective of the corporate or individual, rich or poor or anything, both direct and indirect, and give a moratorium for that. It will help. People will come back to consumption. People will come back to the manufacturing. People have additional money in hand. They can plow back. This is my feel.
Wow, this has been really, really meaningful, because when we speak to being a media company, when we speak to a lot of CFOs or CEOs or heads of the businesses, this is the major worry. They are saying that if government wants to do something, they should actually people empower people with delaying the taxation and something like that. In fact, that you said. What will be the major difference if actually government takes this step? Do you think that perhaps the situation which is going to be worst for next 6 months will remain worst for 3 months, and will cut down those 3 months if the government actually takes this decision of delaying GST or delaying all the repayments on direct tax, indirect tax everywhere? Do you think so, Mr. Datta?
I think so. It will be a prudent action rather than a knee-jerk reaction. You see, government has done a phenomenal job, being completely apolitical, is phenomenal job in saying people stay at home. That's the best thing. 130 crores people staying at home. I think no other country can even imagine. So it's a phenomenal job. So in case a government can take such a drastic step, which is, I think, the prudent step anybody can take, right? I think they can take that call. It needs it's only probably a little more pragmatic thinking that, okay, I'm giving a guidance to people how to use your money for the next 2 or 3 quarters. So my feel, as of now, they can give a moratorium for the next 6 months at least, to not to pay any taxes and keep on plowing back the money. Remember one thing: in case manufacturing comes back, in case consumption comes back, Madan knows for sure, I'm not an economist, he knows for sure the money multiplier effects is very, very high. It's very significant. Everything falls into the place. We will not talk about inflation. We will not talk about fiscal deficit anymore. Even otherwise, government is saving a lot of money. The railways are not spending their routine money because railways are closed, right? A lot of administrative work in which we do, that is not being spent right now. There are savings. Oil prices have come down. Even consumption of oil has significantly come down on the street. So naturally, government will save. One has to do that balancing and come back and take a very bold step and say, look, you need not to pay. And I'm very hopeful that it will happen.
Right. Just roping in here, Mr. Venkateshwar, and carrying the same thought forward. Do you think, Venkateshwar, and it will be a major relief for the businesses, and this is how perhaps we can protect the business if government takes a call on postponing all the taxes, specifically on the direct tax or GST or whatever the tax that the industry is paying right now?
Yes, no, I think that will be a good step. In fact, a combination of things. So what, of course, allowing businesses to retain that liquidity to kind of deal with other priorities, and in a sense kind of postpone their tax payments is certainly one thing. But together with that, the other point which Manas mentioned about considering some novel steps like potentially carry back of losses, because carry forward of losses will only give them relief over the next several years, whereas if you allow a carry back for the last 3 years, 5 years, it allows companies to get back quick liquidity again from the government back into companies, etc. So I think the government will need to do some out of the box thinking and maybe new concepts which have hitherto not been there in our tax law. I think will need to be considered and brought back, and I think that's certainly one of the things to be done. Now, of course, certainly there are already a bunch of things that between the RBI, the Ministry of Finance, and the Ministry of Corporate Affairs, they've already brought together some bit of relaxations. I think it's about maybe giving a longer rope, because that looked enough at a time when we thought the 21-day lockdown may be enough, but maybe that isn't, and it is going to go on for a longer period of time. So I think it's will probably be appropriate for the government to consider at least like a 6-month kind of extension on some of these things, and get that liquidity back in companies so that they can put it where it matters the most right now. And as you would expect, I think companies are going to find it difficult to go and access other forms of capital at this time. So certainly equity capital is certainly out of the question. Again, debt markets, commercial papers, extra may see a pickup, but again, it's not going to be very easy in terms of getting the pricing, etc. I think companies will need to look at other ways to get the liquidity back in the system. And I think there may need to be regulatory relaxations given, for instance, cash pooling within groups, because the Companies Act 2013 had brought in a lot of restrictions in terms of moving cash between entities within the group. So you might now have cash actually stuck in several parts of the group. So some bit of regulatory relaxations to allow quicker cash pooling without any regulatory implications extra. I think those are also things that the government should very quickly kind of consider. And last but not the least, I think the banks need to act on the RBI directive, and I think pass on as much as benefit as possible to the industry in terms of the relaxations, restructuring, or the moratorium on repayments and so on.
If I could just add something out here, to carry forward this
yes. In fact, I wanted to come back to you, Mr. Sabnis, on this. Yes.
Okay.
Yeah, so I wanted to, in fact, we are just, close to just 4 p.m., but still the participants are there. And in fact, I want you to come with the closing remarks, Mr. Sabnis, because Mr. Datta and Mr. Venkateswaran also said about the repayments and all. So in fact, I wanted to add and get your perspective here, specifically on the economy by government. Any chance can do this? If they do it, what would be the burden on the government? This is the question that I have for you, and your closing remarks, whatever you think about the repayments, sir.
No, in fact, I would like to extend this particular argument which has been put forward by Manus and Sais, that why just a moratorium? Why don't we say that, like, say, if you go back to say what UK, US are talking about, they're talking about giving money to each and every individual. Now, why don't we? Now we've already given 1.7 lakh crores for the poor people. I think that one particular segment has been addressed. Why don't we say that every taxpayer pays only 11 months of tax? Okay, so today if you're talking of total tax collections of the central government, it's something close to 18-20 lakh crores. So giving up 1 month of taxation, which is again equivalent to 1.7 lakh crores or so, which we'll be losing, this will provide a major stimulus both for industry as well as for individuals, because everybody who's been affected, every taxpayer gets a benefit of saying you don't pay 12 months of tax, you pay 11 months of tax. I think that would be a real stimulus which could be given. It won't really cost the government that much, another 0.75% of GDP. So we're really talking of something not more than around 5% of fiscal deficit, which I think is definitely something worth considering.
I think that was really, really nice, very, very meaningful. It was really great to listen to all of you, and it's been more than an hour, but we still have 120 participants with us, and it was very engaging. Thank you so much, Mr. Venkateswaran, Mr. Datta, and Mr. Sabnis, for sharing your remarkable perspective. I'm sure the participants enjoyed. I myself enjoyed a lot. This has been great. On behalf of the participants and ETCFO team, I thank the speakers, all of you, for sparing precious time and addressing the queries in this webinar. Many, many thanks. I also want to thank the webinar attendees for the participation. If you have any queries unanswered, we will try our best to get the answer offline. Please do share it with us, and please stay connected to etcfo.com. We do send a daily newsletter every day. Those who subscribe to us, please remember it's absolutely free. You have to just enter your email ID, and we'll send you a daily newsletter with remarkable stories that we are doing specifically. And stay connected to etcfo.com. Feedback is always welcome. Thank you so much for joining on etcfo.com, and thank you so much, Mr. Datta, Mr. Sabnis, and Mr. Venkateswaran. Thank you so much.
Thank you.
A pleasure.